What's up traders, it is Marco here from elementaryfx.com. Okay, so this is a weekly analysis video and about 4 pairs, which you will see them later. But before we start, I want to just say that if you have comments about it, if you have some question about this trading, just write the comments below the video or contact us. Don't worry about it, okay? Just go on our site elementaryfx.com and we will be glad to reply to you and answer your questions. Okay, so the first pair we are gonna see is Euro USD. Okay, this is a daily chart, and before we go into our hourly chart where we usually trade, I want to get a clue on the bigger time frame. Okay, so to see what's happening, right? On the daily chart we see really from October 2015 a really drop from the euro, right? And now it is kind of in a consolidation from last year to now, creating a channel, as you can see, an Elliott wave channel, kind of. And as you can see, there's a pole right there, the channel, which is in red one, or even in blue one. You can spot them, two different types of channel if you really want to be strict with lower lows, lower low, and this one is a bit off from the channel. But anyway, overall there's a channel right there. Okay, so as you can see, price just touched it 5 times. Okay, as Elliott wave theory says, that price should, or maybe not should, but often broke the channel on the 3rd or the 5th wave. Okay, so we are currently on the retrace of the 5th wave, so we are in a really nice spot for a decision. Okay, so with the channel, after the 5th touch to the structure, which happened like on January, this is January, we have some really nice clue about what's going on. I mean, usually on Elliott wave theory, price should touch 5 times. 1, 2, 3, 4, 5, which we are currently now, and then retrace a bit, and then keep going from the direction of the start, right there. Okay, this is our pattern of Elliott wave. Okay, now that we spotted our pattern, we are going to apply our theory to the market. And how we do that, basically, it's kind of simple but hard at the same time, because you never know the market, but we will try to do it. Okay, basically what I'm looking for is just this level. Okay, I'm taking count for the last higher high, which is the 4th touch, and the last lower low, which is the 5th. Okay, I take this swing low to the swing high, and as you can see, there are 2 viable levels, the 0.5 and the 0.618. okay, so from statistics it's shown that this level, the 0.618, is the most common touched level of all. Okay, so what I expect for price is that actually it will rise up. Okay, because we just touched the channel. Okay, so we focus on the other opposite channel, but since we are in the fifth channel, in the fifth touch, we need just a bit of retrace, not the completion. Okay, so we actually want a retrace to an important level to let the bear gain strength to break the channel and then go down. Okay, so we are actually pointing up now to at least those two levels. We are actually pointing up at least to those two levels. Okay, now that we have the direction, I want to look to structure on the left. The important structure like support and resistance. And what we can see is that to 0.5 Fibo level, we find this. Let me highlight it in orange. Okay, we find this. Okay, I keep going on the left. We find maybe this, but it's not really strong. Okay, and we find this, which is not strong, but it's broke. It is the 6th one level, I think. Something. Okay, I leave them. Okay, so 0.5 fib level is, yeah, it has some good points, like this one. This is a really good point. This one is also a good point. You can even count this, maybe a broken retest failed, a fake out. But this is a really nice point, this one in orange. Okay, while on 0.618 we will have this one, oops, which is nice. We will have this one, which you can even include this. Okay, you will have this, and so on. Look at here. This one is a bit lower than expected, but should be fine too. You can have it, even have it this. Okay, this one and this one. Okay, so what I like about those two levels is that they actually bring reversals because they give bears more strength. I mean, it is going up right now, okay, because it's creating a new higher high. So I do expect the price will reach 0.5 or 0.6. I prefer 0.61 because it has more percentage to be hit. Okay, and it will go lower later. Okay, but since this is a daily outlook, not sorry outlook, but it's a daily time frame, I want to get a closer view to our weekly, because if we don't trade accordingly to our time frame, we just do the wrong things. Okay, why I'm going long on USD? Basically, it's because, let's go on the 4-hour time frame. Basically, it's because you can see this thing. Okay, let me show you. This is the peak of the 5th touch. Okay, which it created the channel structure. Okay, so basically what I'm saying is that we can actually replicate this movement that price did and do it like that. Can you see it? This is a good movement, okay, and there's the retrace. That's the retrace. Cool. Now, price could be really intended to go to the fib level right there. okay, which is the 0.5. Just following this ABC pattern. It's cool for me. That's a reason, but mostly is because on the current hour time frame, price just hit 0.618 fib from the biggest swing we have. Okay, this was from 2 weeks ago. Okay, so this rise is from 2 weeks ago, and price just hit barely, you can see that 0.618 fib, which is a super important level. Okay, as you can see, also it did this. Price broke 0.5 level, okay, retested and went down. Now that price is really going down, I think it will really go up, just because it is a really nice Fibo level, and because of the outlook we actually just said about going long to reach the higher Fibo level. Okay, so if I would trade that, which I'm totally going to do it, on the long run, okay, I'm here, I would say, there you go, this could be an option. Price is here. I will place a trade on the 618 fib level. Stop loss right above this spike. That's our stop loss in red. Okay, because if it goes down, it means that the little retrace we are searching for, a bigger downwards movement, it's already over. It means this is our peak and the retrace is over. Okay, so if it breaks below that, it would mean the price could even reach our blue structure and even go down here, so somewhere around here. Okay, but for now I'm going long. Okay, this is one trade. I wanna also place the other trade. Okay, this is our first trade. Price is exactly right there. Okay, this is our first trade, and also you can even play safer just by doing this. Okay, let's hear something. Okay, this is a 1.62 ratio trade, and this is a 2.42 trade ratio. Okay, 460 pips and 310 pips. Okay, on stop loss, I would say 30 pips might not be enough for that. Okay, mostly because there are these wings. Can you see that? Oh, sorry. Mostly because there is this swing, okay, which I don't like. It's kind of a structure breaking. So if I would play safe, even more safe, I would go right there, giving more space to this swing. 30 pips, 40 pips, 50 pips, it's cool. We still have our ratio. Okay, let's play it like here. And those should be our long-term trade. Okay, you can even play long-term. If you wanna play it on a smaller time frame, maybe doing a quick a quick trade, like for a couple of days, maybe the entire week, because these maybe can even take 1 or 2 weeks, even 3 or more. But it's okay. If you wanna play with much less time, I will go right here, focusing not the completion, because if it doesn't go higher you still get profit, but something like that. That's our target, and stop loss right below for this peak, or even you can go 1 ratio. Okay, it should not reach lower. As you can see, there's a new bar coming right down green from 4 hours, which is pointing up, so it should be the right direction. Okay, basically what I want to do is to complete ABC pattern, which is this, okay, this blue, and reach our 0.5 fib, maybe even reach 0.61 fib and go lower, as Elliott Wave says. Okay, that's our command. Follow your rules and your setup and your trading plan. Okay, also I want to add something. This, I found this before. Okay, this blue line, why is it good, why is it bad? Okay, why is it good? Because it creates a new channel which price perfectly replicates. Okay, the price touched the channel and it went down. Now what is it doing, the price? Okay, so price actually went down to gain more momentum. Momentum is just the strength of the pair. Okay, getting momentum just allows the price to break the structure. So we want to actually expect the retrace because it did the channel, and we want to expect the upper swing, maybe breaking the channel. Okay, retracing to retest the channel and going up to our 618. I really like this one. It's another confirmation that price is going up. Okay, so I think for USD it's everything for the week, and let's get going on Euro Yen. Okay, same story. There are 2 channels right there. The blue one, which is insane channel, like a year channel. Okay, let me go to the daily. This is 2016 and this is 2017. Okay, there are kind of 2 channels. This one red, which actually holds support really nicely, even here, and price is actually coming right there. And there's the big one blue, which holds resistance for a long time. Even if it breaks, it's okay, don't worry. It's just Elliott Wave is never perfect. You can also have bigger swings and break the channel or fake out. It's fine. Okay, so basically what I'm seeing on the daily chart of Euro Yen, I'm just seeing that price just came into again the channel that was into before. Okay, so as Elliott Wave says, we take our swings 1, 2, 3. We are in the completion or the 4th touch. Okay, let me enlarge this channel. Okay, so we are actually going for the 4th touch of the channel. Okay, what do I expect right there? I do expect just a touch and a focus on the other channel, on the opposite side. Okay, it could be also the last touch we do in this channel. Okay, because waves can break the channel on the third or the fifth. Okay, so if things go really good for us, we actually get all the swing to the opposite channel, to right there, which is kind of 3,000 pips. Okay, 3,000 pips, 3 and 3,500 pips. Okay, while if we are unlucky, we actually get the swing to 0.5 or 0.618, which is around half. It should be like half, 2,700 pips. Okay, so we are in a perfect spot right there for a long. It's still not touched the, it should drop a little bit lower. Okay, even if it's not perfect, it should drop a bit lower, even because that's a nice channel, this one, because it's really nice and not approximate. Okay, so price should be go a bit lower, maybe let me see, maybe to this level. Okay, which is 50 pips, 500 pips, I don't know, and then go up. Okay, it's the same as Euro USD. It's the same story as Euro USD. Okay, so what do I expect right there? I do expect a swing. Okay, this will be our kill zone, the one in blue. Upper swing, maybe to 0.5 or 0.61. If things goes badly, it will break down and keep going down. Okay, while if things keep going good, it will reach the upper swing. Okay, it will reach the upper swing, retrace, and go higher. All right, I really think it will just reach 0.5, because on the third retrace it actually didn't went up. I mean, this one was the only occasion he had to go up. All right, this one, and you can also see a dodgy candle right there, which showed a lot of indecision right there. That's a dodgy candle, lot of indecision of the market right there, because it was 0.5 fib level. Okay, so on the third retrace, I think market just touched 0.5, and a lot of people right there said, I want to go out from this, I want to go out and break higher. But since we are touching on the fourth, we just follow the rules. Okay, following the rules, so we focus on 0.618 and on the other side of the channel. We still are close to our kill zone, so maybe 1 or 2 days we will be able to actually place a trade right there. Okay, focus, 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 focus on the line. Focus. Let me clear this thing. Just a moment. Focus on this line, okay? The red one, which is at 118.5608. I think this line is a good kill zone, which I will enter now. It's a kind of on an aggressive trade because it's too high for me. We should wait maybe a touch right there. Here. We should wait maybe a touch. But even here should be good. Even here should be good. It's a bit high, but it's a good risk reward trade, even if it's a bit high. Just look at it. Okay. Let's point that I place the trade on my level, on my kill zone. Okay. I want to get out slightly above this peak. Just slightly, not above, sorry, but below this peak. Okay. This red peak. Cool. How many pips? 57 pips. Should be good. 57, 6, around 60 pips for 370 pips. Should be nice. Yeah, could be nice. Risk reward 3. And if you wanna be safe, I would say, which is kinda risky, I would place the stop right there. You should even get your stop right there, which is cool. Okay, just looking at it, I think I found a nicer kill zone. Yep, it really fits this peak. Okay, so this is our resistance that became support, and price just touched it. So I think it will come here, touch this one, and go higher. Okay. This could be a trade. You can even play it like this. Okay. It's still going long. The problem with this is just the entry. That you have to wait. Not the problem, but you still have to wait. Okay. There you go. It should drop again something. On the smaller time frame, all I can see is that price just broke. Okay, so it might go up, retest, then go down, touch, and spike up. Okay. Because it just broke right there. Okay, so it's going up and retest it. It can even go straight up, but I think it will go down and touch it. It's cool. Okay, that's our weekly overview for Euro Yen. So it's another bullish. It's another bullish trade, like Euro USD. I think Euro will be a really rising pair in this week outlook, and there are lots of things that confirms it. So I'm really confident in those trades. Okay, mostly this one, even if it's a big one, it's cool. 400 pips. That's cool. Okay. Next one, it's USD pair, USD CAD first. Okay. USD CAD. What happened to USD? Okay, so let's start from the outlook, daily outlook. What we can see on USD, what we can see on USD. All I can see is this, okay? Rise, that's a rise. It's almost a year rise, like 8 months rise. Okay, after 8 months of rise, price went down. Okay, went down, and now what's happening? This is a flag. Okay, this is a rising flag. This is a rising. Price came back. Okay, and that's our flag of consolidation, and someday it will go down again. Okay. Why it is a nice trade, this one? Okay, as you can see, we have a pole. This is a pole. This big retracement is a pole. This is our consolidation, which you can spot your Elliott wave. As you can see, 1, 2, 3, 4, 5. Retrace. It didn't touch the higher structure. Okay, so it did retrace and then broke down. Cool. We just discovered it on Euro USD. So Euro USD should do the same as USD CAD is doing right now. Okay, so it broke the channel, it retested here. Let me get a closer view for you. It broke the channel. Cool. It broke, retested, was not enough. As you can see, it retested. Look where it retested. Swing low, swing low, swing high, retested. 0.618 fib, went down, went down. Cool. Retested again. Seems that price was not strong enough to re-enter actually on the channel that of before of Elliott wave, so it again went down, and now it's retesting. This is all retest. Okay, why, and I say why it is a nice trade here? Because of this line, because of this. Okay, you can actually even play it like this. It is a nice Elliott wave channel right there, because it tested like 3 times. Okay, so as our rules say, what price should do in next days? Price enter the channel, touch the top, okay, went down, broke, retested, so it should go down right here for this channel. Maybe later in the days it will go higher to retest it and keep going down. I think it will create something like this. Yeah, something like this. I think later in the days we'll create a triangle, an ascending triangle. Okay, and maybe next week we should trade the breakout of it, maybe upper or lower. But since it's a rising wedge, a rising flag, probably price will go lower, a lot of lower. Maybe our target will be this one, this peak. Okay, so we are kind of late to the party right there. Okay, but nothing is really bad. Okay, take our Fibo levels. I draw it. Okay, reverse it. It's the opposite. Okay, so as you can see, maybe you can even price can even go lower and touch 0.5 before turning up again. Okay, I would not trade long on this pair at all. I will not trade long, not at all. So I think I will skip this this touch and wait for the other one right here on the top, somewhere on the top. So basically my trades will be something like that. Let's say the trade is about half here. Okay, still on this purple line. Let's say we get to the other channel because we expect to break it and retest it and go lower. Okay, you expect it to or consolidate right there or break it, retest it and go lower. At the end of the day, I think we will reach the lower one, or we can even reach the retest right there. We should have we could even place their order right now. Well, not right now, but we could even place the order right there. Maybe a sell stop order right there would be nice. Okay, so if I would place a stop right there, my trade would be, let's say, okay, this is the nice level we have. Let's say something like that, even more. Let's say 1-1. I want to reach half of the levels right there. Let's say 1-1, and all the pips we have here are free. All the pips we have here are free, totally free. Okay, that will be our trade, because price broke, retested, and it should go down. So even if we have like, how many pips are these? 62 pips. Okay, even if we catch 62 pips, those aren't that bad. They are really good. Okay, should be good. That should be good for USD CAD. On the larger view, as I said, I'm expecting it to go lower because structure broke. It's creating a new structure right there. Okay, and it will definitely go lower right now. Okay, that was USD CAD. Let's pass on the last one, USD Swiss franc. Okay, daily time frame. What USD say Swiss franc is doing? Basically, its price has been ranging for a long time, except this one. Then, okay, so price, as you can see, price didn't create new higher highs right there. Okay, so this is an insane resistance level, which will be hard to pass right there. Okay, what I noticed is that price is actually following nicely the chart and the patterns, okay, of a little wave that I've drawn. And we are actually 1, 2, 3, 4, 5 and 6 days ago. So last week we actually just touched the bottom of the channel, right? So as our rules say, we touch the lower bottom and we focus on the opposite channel, right? Okay, by saying that, then price just spiked up, and that's our price, okay, which is moving right now. Okay, it's forming a doji on the daily candle, but it's market just started, so it will be definitely another candle on the doji, I think. Okay, so price just spiked up. What we're gonna do, we are going to see where it will go. Okay, swing high to swing low, and what we can see, price just touched 618 fib level. It really touched it. Okay, so as you can see, I've also drawn another channel right there, a consolidation that actually is a really nice consolidation pattern, because as you can see, there is a pole right there. That's a pole, and there's the bearish flag. Okay, as buttons say, pole, flag, bearish, and rise up. Cool. Okay, so what do I expect right now? I do expect that Elliott wave 1, 2, 3, 4, 5. Okay, that's the 5th Elliott wave, which is currently ongoing. We do expect a retrace, and we do expect a breakout, and then these will follow. Okay, these will follow a breakout, a retest of the structure, and then another spike up. Okay, why I have a short right there? This is an intraday trade. Okay, why I have a short right there? Just because price just hit 618 Fibonacci level, and because of that, I think that bulls will need power to actually break the channel. Okay, that's why I'm actually shorting it, because if you actually take your Fibonacci level, you will see that swing lows to swing high. I think price will just drop to 0.5 or 0.618 to gain strength to actually break up. Okay, if you want to play safe, you should not short it at all, even if the channel is going down. Okay, even if it's a bearish channel, I think you should not short it, because it is currently respecting the pattern. Okay, so you should wait maybe for a retrace to 618, this low, to go long again. But that's just an intro trade. So if you wanna go short and follow me, I will short it right now because we are on the fib level, pointing to the other fib level, and then go long here, go long maybe on 618 level, go long, stop loss below the last peak, and take profit take profit is somewhere between the next swing high, which is around here, that will touch this structure, and swing low to swing high, and extension is right there. So it will be somewhere between the touch and extension. You have to really be careful about that, because it really depends how much time price will follow it. Okay, if you want to look at structure, 1.2 Fibo of this wing is equal to this structure, which is something I really don't like. Yeah, I really don't like it. So let's see 1.618 is here, which is our completion. Yeah, I think it's more reliable, this one. So it will be like this. Probably price will reach this level and then retest it, something like that. Okay, I think that's everything for today, guys. That was our last hour review for our pairs of the week. If you are interested in more videos, just check our website at elementaryfx.com. I'm Marco, and I'm glad I could do this review for you. See ya, guys. Bye bye. To the next trade.